Good morning, everyone. Welcome to Dalal Street Opening with Anushri and Mr. Gowda, our expert analyst. Let's ask him about today's market review. Welcome, sir.
Thank you, Nifty. Very good morning. And yeah, as far as today is concerned, it's a soft opening, and you can say 16,200 still acts as a very good resistance because open interest data shows that maximum calls are written at 16,200. So though now the market has opened more than 16,200, but still it acts as a very good resistance. The second resistance, which we see in the monthly call option data, so that is at 16,500. Okay, so on a monthly basis, there is a long, the trading range is little on the higher side, it's quite wide, but for the weekly range, it is very narrow. So one can expect very immediate short profit booking in the very short term. So what I would suggest for investors at this point of time is instead of 16,200 call, you keep a 100 points margin and you can start writing 16,300 calls for the weekly call options. If it goes beyond what to do, that we will update it you accordingly. And as far as put is concerned, the support it's around 16,000, and then again 15,700 it acts as a same support. So that is 2 weeks support what we can see now.
Okay.
For 2 weeks, that's a solid support.
Okay.
And now coming to the global markets, it's all trading in the same 2-3 days. From last 2-3 days, it is quite opening and closing also. Not much volatility,
Yeah.
and there is not much changes in commodities prices as well.
Yeah.
Crude is trading around $101, which is very good for India. If it corrects further, it is even better.
Yes.
And if you see this, gold and everything, they're all trading in the same range from the past 2 days.
Yes.
But however, copper saw some short covering, you can say. Copper has been continuously falling since Ukraine-Russia war. Why copper? Why copper got mm, is in short covering mode is the China has announced that some infrastructure activity by issuing some bonds. So that is how copper got recovered. Apart from that, there is no danger. There is no immediate danger for our Indian markets.
Yeah.
So which are trading in a very narrow range. It can be trading in a narrow range of 15,700 and 16,200. But above 16,200, at least it has to close on a weekly basis.
Okay.
Suppose yesterday it was very close to 6. So next week, till next week, we have to see if it closes above 16,000, then we can initiate fresh long positions. As of now, the market is really not good for, it's not good for to initiate longs.
Okay.
So, and the investors, who have bought shares in very recently, like in previous 2 weeks, so they can actually partial profit. Partial profit in the sense, so one has to look into the fundamentals of the stocks and everything, and just see if you are gaining some 10-15%, you at least exit 50% of the shares which you bought. Why? Because this is suggested for only short-term traders, not long-term traders. So short-term you can see one more correction, a very minor correction. That means those who have invested money in the past 2 weeks or 1 month, so they may actually exit in some stock.
Okay.
So that is what you have to be carefully watching.
Okay.
Apart from that, short strangle, that is 16,200 and 15,700 still remains holds good. And then short straddle, I would not suggest at this point of time. So this is the one strategy which you can deploy now. The stop loss and everything will be updated in the next session. Even if market goes up by 100, 200, 300 points, need not worry. There will be a pullback.
Okay, okay,
Okay. Yeah.
okay,
Fine.
okay, okay. Thank you so much.